I'm still really bullish on Bitcoin. I think between now and year end, I think it's still possible to be 200,000, and longer term, $1 million for Bitcoin. There's really two tests that will come up. Is Bitcoin going to follow a price cycle next year, which would be a downturn? And is Bitcoin going to diverge from the equity markets next year? And I think that there's a chance that both take place. If Bitcoin enters a winter and the U.S. pursues a budget-neutral strategy to acquire Bitcoin, that means there'll be really active buyers of Bitcoin at lower prices. So if you always have a buyer at lower prices, you're kind of bounding your downside.
Tom Lee starts by questioning a fundamental assumption in crypto, the 4-year Bitcoin cycle. Traditionally, this cycle is believed to follow the Bitcoin halving events, which reduce the mining reward roughly every 4 years. Historically, this has triggered supply shocks that preceded major bull runs. But Lee believes that the continuation of this pattern may be more reflexive than fundamental.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think when people talk about a crypto cycle and it being 4 years, there's probably some reflexivity at work, because the original genesis was that, Bitcoin had a halving cycle. And so people were talking about a price cycle that really followed a Bitcoin in the halving. But in crypto, as you know, because there isn't a company, it's decentralized, and there's no centralized source of information, price itself often becomes really important, especially in the early days. So I think that there was a lot to people looking at patterns and then markets trading on those patterns. And the reality is that it's still true in the equity world, because I can't tell you how many of our institutional clients still look at seasonality, which is just applying a calendar to what price action could be, either whether it's credit or volatility or equity. So every element of liquid markets today. I think that there is probably some credence, because many people are positing that the 4-year cycle may not be in place anymore. Everybody from Bitwise, to David Bailey, so a lot of OGs, and that has to do with the fact that the incremental buyer of Bitcoin is no longer retail, which was really the story from inception up until probably 2024. And so now, in the last 2 years, there's now institutional allocations taking place into crypto, and because of that, it's probably counter-cyclical. Our crypto strategist Sean Farrell still writes about the 4-year cycle, and it probably doesn't matter between now and the end of the year, because in any case that we should be seeing a lot of strength. But I would say that the real test, there's really two tests that will come up. Is Bitcoin going to follow a price cycle next year, which would be a downturn? And is Bitcoin going to diverge from the equity markets next year? And I think that there's a chance that both take place, and that's why we'll be talking less about a cycle, because as you know, Bitcoin also historically followed equity markets pretty closely too. The past crypto winters have been really painful. Drawdowns or declines for Bitcoin from the peak of more than 70%, maybe 90%, and the altcoins and non-Bitcoin doing far worse. I would say that it's not just institutions that are coming and buying Bitcoin now. I think that there is sovereign purchases of Bitcoin taking place. And, the U.S. government, while hasn't completely articulated its strategy for building a Bitcoin strategic reserve, but we know the U.S., when oil prices are low, they are a stabilizer for oil because they are filling that SPR, or Strategic Petroleum Reserve, at low prices, and that always puts a floor for oil. If Bitcoin enters a winter and the U.S. pursues a budget-neutral strategy to acquire Bitcoin, that means there'll be really active buyers of Bitcoin at lower prices. So if you always have a buyer at lower prices, you're kind of bounding your downside. Foremost, I've seen those charts with global central bank liquidity and Bitcoin, and Raoul Pal, I think advances at 16 months, and it's been pretty dead on in explaining crypto. And so I would say that in my mind, it's intuitively logical that global liquidity is a reason why crypto prices do well. Okay. But I think there's a second story arc developing in crypto, which is that was also true when the singular narrative for crypto was, well, it's digital gold, or it represents a vector of trust or of risk appetite, plus it trades 24/7. And so that's why we want to look at it. And maybe that's why people look at it and describe Bitcoin. But now I think that the narrative is changing for a couple reasons. One would be the institutional sponsorship of Bitcoin plus government sponsorship. To get you a template on that, look what happened to venture capital and private equity. Venture capital used to be very predictable cycles, and private equity too, because it was primarily family offices buying it and selling it, and it was very short cycle, and they couldn't, they never really raised a lot of money. The minute it became an institutional sector, it has completely transformed the cycle in venture capital and in private equity. There hasn't really been a private equity cycle since you've had institutional flows into the private equity sector, and now private equity is larger than cash equities. But I think the second story arc is that AI and adjacent to it is financial innovation. Like, these two really huge story arcs are starting to take place. Like, AI is such a big deal because it's, for the first time, it's creating worker equivalents. That means you're not only relying on demographics to drive labor force growth. And at a time when the financial industry now has the green light to really reimagine itself. I mean, as you know, the financial industry's biggest cost is humans in many of their endeavors, right? It's the biggest expense is compensation expense. You don't really have to pay a robot bonuses.
Sure.
And a lot of that is going to be running, and especially because of the need for both authentication and really shifting trust on blockchain. So I think that is why I think there's credibility to the idea that we should still respect the cycles and central bank liquidity, but now I think that crypto is really breaking into much more meaningful use cases. I'm still really bullish on Bitcoin. I think between now and year end, I think it's still possible to be 200,000, and longer term, $1 million for Bitcoin.
So, where is Bitcoin heading? Tom Lee remains incredibly bullish. His price target for Bitcoin by year-end is $200,000 in long term. He sees it potentially hitting $1 million, but it's not just about price. In a surprising philosophical turn, Lee introduces the idea that crypto is already a form of universal basic income you buy.
Look, we know at the micro level, debt is what strangulates a business. I mean, like, let's just take Meta. Like, let's say you have Meta, and it's the best company in the world. And if their balance sheet had debt to sales of, 500% or 300%, it would be very difficult to operate as a company.
Sure, absolutely.
Because the CFO is worried about the debt all the time, and they're going to make suboptimal decisions. So, capital asset, cost of capital models all go out the window, because when you have too much debt, it's essentially crowding out the ability of that company to operate efficiently. So I think that there should logically be a breakpoint where nations or economies or governments become strangulated by the debt. But we know that there is a breakpoint, but I don't know if that breakpoint is in our investment horizon, like in the next 12 months. And then I would say that in the back of my mind, I am thinking and aware of a couple of things. One is that AI is so transformative, okay, and we can imagine so many scenarios. I'm going to still assign, like, I think an 80% probability that we get the benevolent case of AI. And that AI benevolent case is that it solves a lot of the structural problems of inequality, like that. And I know we're diverging, but like if we have robots that are planting and work on farms 24/7, we won't have people starving. And they can also agentically be building shelter, and we solve shelter. I would say that's a huge positive outcome. And then the third, of course, is the question about UBI. Okay, and I'm going to introduce a strange concept, but I actually think crypto is already proof of UBI, because Bitcoin and Ethereum are already examples of UBI. See, people bought these things early, and now they've created, have enough resources passively without actually doing any work, except being, a believer in the community, that it pays for their own subsistence. I mean, in many cases, fabulous subsistence, but it's actually, I think crypto is UBI in that argument. It's maybe it didn't reach everybody, but everyone had a chance for that. And in the future, there'll be, I think, future crypto that creates UBI as well.
His reasoning: early adopters of Bitcoin and Ethereum made life-changing wealth by simply believing in an idea and holding. They weren't mining or coding or building. They participated in a network, and in return, many now passively fund their lives from those early investments. Lee suggests this could be a prototype for future crypto-based UBI models, where participation in a decentralized ecosystem could yield basic subsistence or more. While it hasn't reached everyone, it's a template that can be scaled.